Let this thing shake out for a second. We should be live. Sure, why not? All right, we're live. Hi, guys. Welcome to our YouTube channel. We're going live today. This is our after-hours show. We're essentially calling it a show because we just mess around half the time. You know, it's like a radio show, only with video. So
Show me the money.
here we are, just hanging out on our YouTube channel. You know, we're gonna rip into a couple of things. We're gonna look at Spy and throw some psychoanalysis on it, and I'm gonna maybe introduce you to the Purple Wolf because I put it on my Spy chart today. All right, let me get a screen up here. This is gonna be kind of neat. Let me pull this off.
One day I'll figure out how to turn those alerts off.
Right. There we go. Screen 3. There we go. Get my big monitor.
Jeremy, can you pull your mic away just a touch for me?
Sure. How's that? A little better?
A little more.
A little more.
There
Better?
we go.
All right, awesome.
Better. Perfect.
Okay, so let's break this down a little bit. Let me go start with the 2-hour chart. How about that? So we know where all the pivots are by looking at the 2-hour chart. We simply look left. We can find all the points of control just looking at the previous trend. It's really that simple, okay? So I've got a couple of things on here I wanted to point out. We got this center point, which we had on this middle of this measured move here, all right? We attacked it on the way down, so we've had our measured move set for the bear side. We had our accumulation. We made a half move, but it came back and revisited that pivot and then finished the move today. So where are we now? I've got a wolf wave on here, just purple. Let's go into our 5-minute chart and I'll show you what that's all about. Essentially, we found the first low of the day, okay? And when you set a wolf wave, you find the first low, you put your center point, starting point there. First high, second low, never mind the chop here. Second high, you draw a line from first low to second high, line it up. That gives you your price target for the day. And look, we closed right in that sucker. Easy peasy.
Wow.
Jeremy, can you also do me a favor? Can you say what also do you call that first low to or second low to second high?
So that's a double bottom you're thinking, and I'll open that up a little bit too.
I'm talking about L1 or L2 versus R2.
Yep.
Isn't that what you call that? Isn't
Yep.
that the? Okay, that's also what you call that.
Yep, I'll totally go into that too. So essentially, we had our target, we had our breakout, okay, and then we had essentially a reversal pattern here to boot. So this is a double bottom in its own right. It took forever for it to unwind. Okay, it took most of the day. But a couple other things we had today. We had yet another diamond pattern. All right, so this will give us a trend line to act on later. We will probably run that down. And I'm going to go back to the 2-hour chart to show you why. So our 2-hour chart, we are seeing, look a little further left. I'll even go further than that. How about there? So we have a pretty good shot at opening up tomorrow at about 400 bucks, maybe just shy of it, okay? That's where that wolf wave is going to take us to an open, and that's where that key pivot is. We closed the daily chart. Let me get this in close. Nice clean hammer, all right? It's usually a pretty good indicator that we're going to revisit a tipping point. Are we going to retrace this entire trend afterwards? There's a pretty good chance of that. That's why that bearish target off that diamond is still going to be valid maybe into next week. Mind you, next week is a 4-day trading week. Monday we're closed, so this week is bound to be volatile to begin with. All right, so back to unpacking this 5-minute chart, and then I'll go back to the 2-hour chart once again. Let's zoom way out. This is just one big double bottom, right? We have an L1, we have an H1, and L2. There's a key pivot here, all right, about 394.50-ish. Where did that diamond appear? Right there. Had a nice clean diamond pattern that linked right with our wolf wave, more or less. Count the wicks. Purple wolf is in action. Now it's bullish. Okay, this yellow line here lines up with our bearish wolf from way back. I've already been talking about this all week. And that also is very much the same as the bearish purple wolf I have on my futures chart. I'll explain it. I didn't put that one in purple because I wanted it to stand out against everything. Yellow it is. Okay. Go back to our 2-hour chart. And when we see these patterns, they kind of start to make a little more sense. And you were talking about the daily double bottom. There it is. Okay. So it had that key pivot in there. Now we attacked. where's the control for our double bottom pattern? All right, we got L1, H1, L2. We come up and test H1, that's our resistance, and this whole 2-hour candle blasted through that, so that trend was just nice and
Sure
strong.
did.
But where did that candle stop? Target 1 after the break of L1, or R1 we call it, because when we see a point of control, we see a high in the day, we also look at it as a pivot in itself. So it is, whenever price is below that pivot, then that pivot becomes resistance. So you just label it R. All right, if that price is above that pivot, you call it S because it's going to be support. So when you say, or when you hear me say R1 or S1, you'll know the difference. I'm talking about the pivot, and a pivot is going to be both resistance and support. When price is above it, it's support. Price is below it, it's resistance. Plain and simple. Okay, so we had our nice little double bottom on a 2-hour chart. We could see it on a 30-minute chart. I mean, any time frame you look at, a double bottom is a double bottom is a double bottom, and I trade them on the 10-second chart. So yeah, I get lots of practice with those. So we've achieved, even still, there's your target. All right, target from breaking resistance 1 or R1 on that pivot, or H1, however you want to label it. I'm probably saying it incorrectly when I call it R1. Know that I mean H1. And that breakout, pretty clean, went to target. As soon as it broke resistance, if you were trading a break to scalp this, and that's the part of it I scalped with 6 trades in 6 minutes, run into that target 1. And that was just yesterday's control bar right there. Run a line straight to it. All right, pretty simple stuff on SPY. So what are we likely to do tomorrow? Well, if this gets continuation, we have a good shot at opening right at about 400. Okay, that is a point of control. We know that from the 2-hour chart, looking left. Can we get an extension? Very possibly. Maybe we can find range tomorrow and approach, 402, somewhere in that neighborhood. All you gotta do is look left for points of control. Let's zoom out a little more. We have a measured move. Think of it as a descending channel. All right, the whole thing. Where's the 50% retracement? About 405, right in the middle of this. So we turn the lights back on. I put a dotted line there. So extension, if we remain bullish, we do have a chance at running to 405. Not very likely, but it's there. And if we break 405, that would mean that we reverse this trend and we start to go to our other argument where this becomes your trend, this becomes your pullback, and then we end up with a long-term bullish trend. All right, is that making sense? This becomes the pullback in the measured move. So now we have points of control where we know that breakout can be validated once we achieve that retracement of that channel and break it. If we can't break it, we reject it. All we do is look left. Well, where did the trend go before? All right, control point right here in white, 400 bucks. If we break down, we resume, run into a bearish trend, and we got control points back down. We had 390 today was our low, pretty much. That is a control point at this low here. Okay, if we break over, we're likely to run that whole trend. So if we open high, we're probably going to end low, in my opinion, just looking at this chart. If we do have the off chance that we run high and we run up to that 405 area, get ready for a face ripper. So a slow one. Anyway, we've got all this
slow
trend.
face ripper. That sounds painful.
Yes, painful for a lot of people short because you don't want to be caught in that. But we're kind of interesting time in SPY. If you look at it on the daily chart, we still have this whole megaphone pattern descending. So yes, there is a chance we could break out bullish on that. Looking at the weekly chart, it just becomes a pullback on a trend, just like any other day.
Yeah, we've got.
Yep, there it
Go
is
ahead, go
right
ahead.
there.
You
Sorry.
got that. I mean, we're above the 50% retracement. I mean, we're above that.
Exactly.
It's trying to bounce off that, so that makes sense.
So here's your 50% retracement right there. That was that low.
Yep.
That's that whole trend. 50% of that, boom, we nailed it and bounced. So yeah, the argument can be biased neutral. So what's a good trade for neutral? Stone knows all about those.
Wrangles.
Yes, sir. Those strangles, man, if you're expecting a big move or a big range, yes, you have. And that's awesome. That's a proud moment there. But let me get at it. I mean, when you're sure there's going to be a pretty good move or a pretty good range, you can actually swing trade a strangle. You go a week or two out, you go, what's that sweet spot? 38 to 42 cents on the contract. I just look at the delta or the sweet spot price, whatever you want to
Mhm.
find. Call on a put, carry it overnight. If you get momentum like we had open today, we had some bearish momentum. As soon as you saw that momentum coming, you could have closed the call, let the put run, close the put for a massive amount of profit. Or you could, if you were expecting range, you could go and close the call at the open, ride the put, close the put, buy the call back, run it up, and then if it was going to be range again, go buy the put back at the top of that and enter a strangle without making a day trade. So if you're in a PDT account and you can't afford day trades, you can roll a strangle that way. You can leg in and out of them, swing trading both legs of it, and keep it open. So, kind of a neat trick.
Now, Jeremy, what I'm hearing you say there is basically I can make my strangle and not pay the PDT rule because I'm holding that strangle overnight.
Right. So you can go and hold a position overnight, sell it the next day, and then buy it back, and it doesn't count as a day trade, as long as you don't sell it again that day. So it's
within the same day.
Right. So that's
So you're swing trading strangles. Is that what I'm hearing?
so you can swing trade with a strangle. You can swing trade with a neutral position in a market
Wow.
that is this choppy and this volatile. It becomes
Mhm.
quite profitable. The only time they're not very profitable is when you get a whole bunch of grinding sideways. But when has SPY done that? Well, there's sometimes it has. Sure, strangle wouldn't have worked
Sure.
here. Probably wouldn't have worked very well here. But boy, it would have worked great on JPOW day.
Right. Right. Yeah. And I think that's exactly right. It would have worked great on JPAL Day.
So
Yeah, but
there's
the way now that Iron Condor works in the sideways market, right?
And yes, you can do that too. So if you know it's a sideways market, you can sell an iron condor as credit spreads, and chances are you've got a pretty good chance of letting the time decay eat it up, and then just closing it for less than you sold it for. Or if you're dead on with it, let the whole thing get either at expiration, you buy it back for pennies on the dollar, or you just let it expire worthless if you're gutsy enough. If you're not going to have a Friday like we did last week, that would be appropriate. The other way to do it, you can also run on the debit side, you can run a debit iron condor, and there's a way to leg into that as well. But essentially, when you're running an iron condor, it's very similar to running a strangle anyway. You're out of the money with both sets of legs, and if you're running a spread on each of those and they're a debit spread, you can grab more of a position in the market with uh, less risk, so you could have more leverage in that. And I'll teach that a little more in our advanced stuff, where we're teaching people how to build that position in a way that can minimize risk to the point where it's better than 8 to 1, which is huge. So if you can get into that and you're riding those condors, you can make some pretty good returns without really trying or without really risking a whole lot. But it's going to take some time before you get to that point. And ideally, you want to practice day trading and swing trading a little bit first. And these strangles will probably be a little bit more your level if you're doing that. And then also the equity is going to matter too. So, for instance, if you look at the options liquidity on forward and look at the low prices of it, and then you do some analysis on forward. Forward is great for day trading, swing trading, and complex option trading if you're just cutting your teeth on it. And Stone knows a lot about that.
Yeah, it's
We traded forward in the penny stocks room, so
mhm,
it's that cool.
absolutely. And it's affordable to get those right at the money calls and puts, or even in the money calls and puts.
Absolutely.
If you want to do like one contract of each to swing and do like a strangle on it,
Yep.
they're great for that.
Yeah. If you're not quite in the fortitude level of trading a strangle on SPY, you can do it for about a quarter the price on forward and still be successful at it, as long as you know it's going to make a big move. And forward is kind of setting up for a fairly good sized bearish move the way things are looking. This is setting up to be quite the triple top. Mind you, don't for a moment think that it can't turn into a diamond top and then continue on this trend. So today was an okay day to enter a bearish position on that, but tomorrow you're going to wonder if it's going to be fruitful or not. So ideally,
Yeah.
you got to kind of watch these, and I'm going to build a diamond just to show you guys what I'm talking about. And here, look, it just barely broke. So today, if it it came back right to about the opening price. So realistically, this can be a continuation pattern where you get a trend, a pullback, and then it becomes a measured move to the bull side. It's very possible. But I mean, J-Pow came out and told it like it is. I mean, a lot of people are probably still pretty bearish on the market overall. But be cautious. This is a time of the year where things tend to lead up to a bigger move, but they're more or less going to be kind of choppy and hard to read. But I think probably in the next week and maybe in the week after, we'll have some direction on whether the market's going to keep on trending bearish like it is, or if it's going to reverse and give us that bullish measured move. It's very, very possible to go either way. We're still kind of on the fence. And again,
Yeah, come and check out our recorded stuff if you want to talk. If you want to hear about Stone talking about his charting for the bullish move.
Exactly. We're gonna edit all this together today. We've got some stuff recorded before we went live and stuff recorded after we went live, and we're basically gonna put it all together, edit it, release it over the weekend, and we'll give you guys some more detailed analysis over the weekend. So stay tuned.
A little more in depth.
And again, be sure and hit that subscribe button. We got a lot more of this coming. We're gonna do a lot more on our YouTube channel in the coming days and weeks, and we're gonna hit it out of the park for you guys.
Yeah, we're committed.
We're committed.
All right. Who's getting committed? I'm not committed anywhere. Y'all try to commit me.
Well,
hey,
yeah.
Jeremy, get the straight jacket.
Yeah, it is at an interesting place in the market right now. That's for sure.
Yeah,
it is.
It's where something's going to happen. I mean, it's the spot that we've always talked about. It's the spot where something's going to happen.
Yeah, there's some inflection here. It's building up to something.
Yeah. And you're right. We've been talking about strangles a bit, and that's a huge thing to do right now. Because it's going to go one way or the other. Something's going to happen.
Got to snap somewhere.
I didn't know if I could do that. But if you look at the chart on SPY and you do that 2-hour chart and you go back to that big gap on what is it, like 610?
Hey, let's put it up.
Yeah, put it up, Stone.
Oh,
show us what you got.
Thank you. Said put up or shut up, huh? All right, let's see.
We're gonna put you on the spot, baby.
Let's go to screen 2. How's that? And I'm gonna share that, and let me pull this up a little bit where I got it. Okay.
All right.
All righty then.
I've got the logos and the gallery all over the place on that right side of the chart. So
let me get the right drawing set, and okay, let me get that set.
Yeah, if you'll back it out just a touch.
Who, me?
Yeah.
Wow, back up
because he's got his banner. Jeremy's got his banners and everything across the right.
Okay, I will back it up in just a second.
We got to show our faces.
There it is. Over here, like that?
There we go. Perfect.
There we go.
Okay. All right. So let me pull out to this larger time frame. And I'm gonna back it out. But let's go look over here first. This is what I'm talking about right here. This gap right here.
I remember when.
Okay, you remember when? Well, look, that's 386. And this is yeah, my prices are probably right where your heads are. All right, so we got that gap right there, but look at what it looks like to me. It's a little bit of a demand zone. I mean, at least it was demand for bearishness there as well as it was there.
Right.
So let me pull back all the way over here, and you can see.
Turns from demand to supply to demand and supply.
This is that gap right here.
What kind of?
That's that gap.
Just on top of the balance of that.
Yeah, and then watch this. Just what you were saying. I actually had the same drawings that you had, and I was blown away when you showed us your 3 week. Look, I had this same thing you were showing us.
Yep.
I have and this is now what this is this is your uh, mean regression
Hmm.
tool. I have one that was just the line, and then I have a channel regression. I said, well, I'm gonna draw my channel regression today because I already had this line here, so you can see it. Just so you can see it, Bob. See, I had this line right here. We looked at this line before and talked about how we had gone way to this end of it, and then went way to that end of it, and then I put that channel on today, and I went, oh wow, look at that. We're inside that top part of that channel. So it is anybody's game tomorrow.
Yeah.
And especially with, it's weird as we have 2 expiration days next week back to back.
Yep.
Did you notice that?
I did.
Is that common for Labor Day and things? Well, I guess
Yeah.
now that they have 3 expirations.
When there's a Monday holiday, I mean, you still have 3 expirations for SPY on weekdays or
That's,
weeks, every
yeah.
week.
I know this is a real mess right here because I drew this wolf wave that Jeremy showed us. I drew it the same way while you were showing us.
Same color.
And then I put the purple on it too. I was like, I'm gonna have me a purple wolf wave too.
No, the purple
Jeremy,
wolf is lurking.
yours is purple. His is more violet. Don't worry.
Yeah,
Okay,
don't worry.
okay.
Don't give me any hard times. So, but I just found that interesting. We're on those levels that we had hit today from way over there back in June and early July. And and then here we are right there, right almost at the mean. So we could go down below the mean,
A lot happening.
or we could go, this little hammer might say we're just gonna go back up here. We get a morning star tomorrow.
Could go break out, fake out.
But
Who
I
knows? Who
didn't
knows?
get my strangle in like I wanted to today. So
Oh, so you meant to get a strangle in?
mhm.
Yeah,
Sorry,
I
you
did
didn't
too,
get
but I
to.
didn't get to leg it right. So
No, exactly. And those spots we're talking about, like on Ford, you can get a about the same price as you would pay for like in the money or at the money for Ford. It's about the same price you would pay for one of those like 38 to 42 sweet spots, or the point 0.05 to 0.07 uh, spots when you're looking for those strikes, 6 days out. Like I went 6 days out yesterday, and did pretty good today. And it's about the same amount of money as that Ford call or put. But I guess the Ford ones move better because if they're like right at the money,
right.
you're gonna get more on that one than
They
you would buying the same SPY or spending the same amount as you would on SPY.
they print quick, and for the amount of liquidity, you would expect faster time decay. But actually, you can go 6 days out on Ford, and they stay pretty stable. They don't break down like SPY options do. So
Right, right. That's pretty good to know. That's, so even just, practicing them, but also just sizing up and going to get them too.
exactly, exactly. And yeah, when you're running like 20 and 30 of them, 20, 30, contracts at a time, dude, you will be blown away at how fast that leverage can apply to you when it moves it further into money, man. I mean, just 100% returns over and over and over again are very, very plausible and possible and achieved
Those Ford
very often.
Ford calls and puts, right?
Yep.
Let's talk about Ford, right? Because Ford's it has liquidity.
Right.
And now I heard Sig say today, because I'm still learning about the option side. So I'm right where it sounds like I'm right where I need to be, because finally starting to get that motion, and work on so many things to focus on. Just focus on price action as opposed to focusing on something else, like the strike price.
Right.
Like we were talking about, stick to the fundamentals, stick to the basics.
Fundamentals, right? Follow the price action and trade the candles, basically. If you have the fortitude to do that, and the risk tolerance. So it's pretty good stuff. But it sounds like I'm in the right spot, and things are getting better with that. They were challenging, and now getting a little bit better at the 10-second chart. So it feels good.
Right.
Positive couple of weeks, and that's been a relief.
Good,
And
good.
just
Glad to
to-
hear it's down.
Just kind of go a little further into that. So like I'm looking at a $15 put for 9/9 expiration, 6 days out. Um, here's where these options are just great for trading, especially for every style. Um, you know, zero point 0.4 delta at the money, pretty nice
At Ford,
at Ford. The theta time decay 0.02. compare that to an at the money option at SPY 6 days out. SPY is probably going to be more like 0.9 to 0.1. Let me look at a SPY option just to be comparing 6 days out at the money. Just kind of give you an idea at how much of a difference it is between like trading SPY options and forward options at the money like that. Let's see, go to the 9th.
Theta.
Yeah, pay attention to theta. Theta is important.
I am.
Yeah, theta is the movement of delta.
Well, no, it's the amount of time decay.
That's what I meant. It's time.
Yeah.
That's what I meant.
Gamma is the movement of delta, but yeah,
that's what it is. Gamma is the movement of delta. Thank you, Jeremy. I appreciate that.
We'll get into that later too, and then we'll explain the strangle position a little better too. So looking at your theta on SPY options, same at the money, 6 days out, 0.3 theta. That contract will lose 30 cents a day, whereas forward will lose, what was it 0.02? I didn't remember.
Yeah, I think that's what you said.
That's 2 cents a day, or per contract. That's a difference of $30 a day time decay on SPY options a week out versus $2 a day forward time decay on options. So you've got time for it to make a move, and if you're in a strangle, it can really be lucrative. Entering it at the right time of day is also important. If you can leg into it towards the middle of the day, when the implied volatility is lower, the delta will be lower, and thus the premium will be lower. So you can kind of walk into that, and it's really neat because
I'm learning something right now.
When you do so, if you use price action.
What'd you learn, Stone?
No, let Jeremy finish. Don't let me interrupt. Let him finish.
If you've legged that strangle correctly, you can use the little wiggling price action. You get where it moves 10, 20 cents maybe in the middle of the day. If you get it just right, you got low implied volatility, and you get the timing right, you can open the call when price is low and open the put when price is high, and then suddenly you've got a little cushion of profit between the two strikes. So if you do this right, you'll have a net profit position, meaning that time decay. If your net profit is say $4, and you're holding this overnight, and the whole contract loses, each contract loses $2, that becomes neutral the next day. So you basically use a little bit of time and a little bit of price action to leg into that position, so that you pay for that time decay without risking it. So
that's a simple that's directional. You're not talking even about spreads. You're just talking directional options and paying attention to the theta and the gamma. I mean, the theta and the delta, right? Or all three.
Theta, delta, and implied volatility are what I typically
implied
watch.
Volatility. Yeah, that's what I just learned, and I went and put some of those things up over here in my TOS options ladder, because a lot of times I can find certain things on it that I can't on Webull.
Yes.
And I can keep my Webull clear of a lot of things. And I can go and it works between the two. So that's great, because now I have delta, theta, and gamma. Thank you.
Exactly. And it's just gonna, just knowing that stuff and keeping it simple like that, it sounds complex, but it's actually really simple, will greatly improve your options trading. Just knowing those things. And
absolutely.
Then price
action. I'm gonna cut the recording at that real quick, and then start it back up. Sorry, I'm just
recording stopped.
Making time for
recording in progress.
There we go.
No problem. We like to edit things in 20-minute clips, so we'll
no, that was perfect, because that's a great explanation, and I knew you were recording it, so I kind of checked out and went to go find my delta and theta and gamma over here on the and just set up my options ladder so that I always see it that way. So
exactly.
Oh, good job. There you go.
That's what I was doing, because I just learned. That's what I was learning. I was realizing I'm looking at delta, but I didn't realize I need to pay attention a little bit more to theta and learn about that theta, because theta is what, your time decay? Is that what you were saying?
Theta is your time decay.
And so finding that number with the theta and the delta, and knowing where the implied volatility is, learning that little formula. I already got the price action. Now we put that little formula in with the price action, and we green.
Yep.
You know what you're gonna learn? It's what Jeremy always said, and it's the reason why Jeremy is such a bear. It's because the bull takes the stairs and the bear takes the window, and implied volatility, theta and delta all apply
Yes, they
that
do.
drop out the window.
When we were on the stream the other day when I had my 200% return,
Yep.
I was like, just dancing practically. I was like, yeah, all right.
It makes your
Matter
day,
of
man.
fact, matter of fact, what I did was I turned my mic off. I said, I got to hang on. I got to turn my mic off. And I stood up and I started dancing.
Nice.
Dance. All right.
He's a musician too, guys.
Doesn't mean I
very
know how to
good
dance.
musician.
That's
But
right.
it was funny. So I had a big kick with that. I was like, all right, because that's been that timing we've talked about, hitting those waves,
Mhm.
I'm starting to hit that timing
Awesome.
with the options. But what I noticed that I'm better at is the strangles, and this has been the week for them.
Mhm.
This has been the week. I wish I'd have done it better. No FOMO, but in retrospect, man, I'll know next time about Jackson Hole.
Yeah. Oh yeah. You're gonna know.
Fool me once, I know next time about Jackson Hole, and
I've
now I know how to handle all of those events. Really, like even those afternoons where we have those big like 10-year bond auctions and things like that. When the market's going to go nuts, those are good to go 6 days out and do a little strangle on them. And now I've got a little bit better formula.
there you go.
We like
Alright.
that.
That's what we do. We teach everything we know, and we show you guys not just what trades look good. We don't we never say follow us into a trade, but
No.
we teach you to find your own trade and trade your own and build your own trade plan, and then how to execute that plan.
I mean, and then on top of that, we're a community and we're always looking at the chart and talking about what we're seeing. And
Exactly.
if we do that together, we can make better trades, and then we're working as a community unit.
Absolutely, and that's not just us
Absolutely.
moderators. That's we're talking members too. We get members.
Yeah.
We
Everybody.
talk to you one on one in the voice channel, and what's great is like we'll answer your questions. There are no dumb questions. You're going to ask a question that half the people in the audience are maybe not even going to be at a level to ask, and
Yeah.
you're going to get that answer out in front of everybody, and everybody's going to learn at the same time. That's what we really concentrate on most at Bullish Bears, is that we
Yeah.
not only learn as a community, we teach each other as a community, and we thrive together.
And we
And
work
that's-
together. Yep.
And that's the definition of a good trading community, and that's what we do.
Absolutely.
Yep.
Look at that. Boy, that is awesome. I am just, we learn a lot of stuff, and we've got levels for everybody. And, I think with, the different type of traders that we have, and, they said it early on, I've heard it a lot, and it's true. You got to find your what type of trader you're going to be.
Exactly.
You're going to be a super scalper. You're going to be a technical trader. You're going to be a hybrid. You're going to use fundamentals and technicals. Is that comfortable for you? Are you an eight EMA SMA man? Are you what is it? And
I love
I
that.
mean,
Fine.
we got people that work across. I mean, there are
Yeah.
so many different moderators, and so like just different styles in our
Yep.
community that there's somebody for everyone to learn from.
There's something for everyone, that's for sure.
absolutely.
Yep.
And
Oh, Theta. I got to learn about Theta now. I want to join the Theta gang.
oh man, and
I've
then
read about Theta.
later on, when you get to be the guy who writes options contract, the one who sells to open, oh,
Now we're talking.
you're
Yeah.
gonna be the Theta gang. You're gonna be the Theta gangsta. You're gonna be the enforcer. You're gonna be out there breaking kneecaps, man, because that's
Whoa.
Oh,
In the market,
technically,
yeah.
in the market, technically speaking.
metaphorically, yes.
Yeah, metaphorically. Breaking price. You're not breaking anybody's kneecaps, but you're breaking prices.
There you go.
Riding that wake of that whale. Woo!
That's it. But yeah, sell to open options, man. You just lay back and make money. It's the greatest thing. I can
Yeah,
go on and
that's-
on about that.
Well, that's the next thing. I'm finally. I was kidding. I had some moments with options, and I was like, oh, he was like making me do this. Futures does that every now and then, but it's
little bit
yeah.
of a twitch.
yeah, a little twitching and forgetting to breathe. But stuff's working out. It's starting to come together, and and just refining everything that So I saw some stuff today, and it was just like, oh, I see that. I know that. I know what's going on with that.
And that's
You know,
it.
Nice.
You get
That's all
that-
you want.
You get that
You get
repetition,
that. Mm-hmm.
and then instantly it becomes an instinct. Well, not
Mhm.
instantly, but you be able to develop the ability to react to it instantaneously, like it's an
Right.
instinct.
And it's
Right.
usually like I'm noticing it's usually like from one chart to the next it's different, and you'll see that it's like that pattern that lines up on that chart. At that time, you're like, oh, that's it. Get in.
Exactly.
Right. Oh, that's it. I gotta get in there.
Get it. Get it. Hotkey.
All
Where's
right.
my hotkey?
Where was I? Somebody give me my hotkey. You know what? Hotkeys are all right, but I went back to the mouse because it's better.
Traitor.
All right. Well, we're running a bit long on YouTube here, so I'm going to probably knock that
All right.
off and then
All right.
Well, thanks, guys.
record
Thank you,
a-
folks.
record a
Appreciate you
wrap-up
for
real
coming
quick.
in.
Yeah, absolutely. It's,
All right.
It's been a great week to learn, and I've been saying it all week in the Look at SPY that it's been a great week to kind of sit on your hands and learn some things. And now coming towards the end of the week, even a lot of our public audience is learning a lot from this. And I'm going to keep doing it. I'm going to keep breaking out with SPY analysis. I'm going to try to do it, more than twice a week. Ideally, I could do it 5 days a week, but sometimes things come up. We're hot in a trade, we can't exactly get out. Things happen. We live. We're all humans. But I'm going to do my best to get out as much analysis as we can throughout the week. And I noticed that a lot of people are having a great response to us providing that kind of analysis. And not only that, walking you through that analysis is even better. And we're going to make that a regular thing around here. So like I said, hit that subscribe button and check us out because we're going places. All right,
Yeah.
guys.
Also hit the like and hit that bell.
Yeah, definitely get that announcement so you know when we're live, because we're going to start doing this every Thursday after hours. We're going to come out and literally just put this together for you guys, and we're going to lay it down. All right, so we'll see you guys on YouTube a little later. Thanks for joining us.
Appreciate y'all. Take care.
Appreciate y'all a bunch.
All right, we'll see you guys, and we'll get another more entertaining edit that we can put out on the weekend. So that'll be a pre-recorded thing. We'll launch that on YouTube over the weekend.